One of the best ways for you to learn how to trade properly is to listen to conversations between experienced traders. So today I've got something really special for you. Just yesterday I had a chat with Diana Perkins from Trading with Diana. We trade different markets, but we both share the same philosophy, and it's going to help you massively. Let's get into it more right now. Hey there traders, Andrew here at the Forex Trading Coach with video and podcast number 608. For 40 minutes you're going to get absolute gold with my interview with Diana Perkins. Let's start straight away. Hi everybody, it's Andrew Mitchem here at the Forex Trading Coach. Absolutely thrilled today to be joined by Diana Perkins from Trading with Diana. Welcome along, Diana. Nice to see you.
Thank you so much, and thank you for having me.
Awesome. Well, look, we got put together because I think someone thought that we would have a great education and insight to help people, because although we do slightly different things, I think our philosophy of trading and helping people is something that will align really well for people watching and listening to this. So maybe first of all, Diana, if you could introduce yourself, who you are and what you do.
Sure, absolutely. So, and I agree with the person who connected us. I'm really excited for this conversation. So, Diana Perkins, I'm the founder of Trading with Diana, which is an educational platform where I teach everyday people how to trade the markets with confidence. I do this through workshops, personalized coaching, and newsletters. And it's honestly the best part of my day. I spent a good part of my career trading and mentoring and coaching others in this space, and recently launched my own business so I can do this full time.
Awesome. Awesome. So when you coach people, what kind of markets do you generally look at? What do you help them with?
Yeah, it's typically the US equity markets, and we're focused on stocks, ETFs, some index funds, and for a small subset, although it's growing, options trading, which I don't formally market, but I did used to be a professional options trader. I love it. There's so much that you can do with stock options. So focus in those areas, but it's really all market conditions, which brings up right. I actually just spoke with a trader this morning about that, just looking almost, the last 9 months in review, but all different market conditions across all different sectors. It's really a flexible approach, and you'll
Right.
hear me say that investing, it's very individual. So.
Cool. I was reading your background about how you started when you were young with charging, I think it was your sister, interest on borrowings and things like that. And it was like, that was really cool. I love that whole story. So I'm guessing you've been into like the financial industry or business for most of your life.
Yeah, absolutely. So as long as I can remember, I was a numbers girl. At 8 years old, I learned what compound interest was, and when my family found out I had a little bit of petty cash, they started asking me for money. So I charged interest because that money could have been earning interest in the bank account. So yeah. So from an early age, I always knew finance was my passion. Throughout my career, you're right. I spent about 20 years in various roles in the finance industry. But it was really it was a class I took in college where we had a virtual stock exchange
Okay.
competition. I'm very competitive by nature, and I wanted to win. In
Yes.
order to win, you need to understand what moves the markets. And so that's how I learned. I knew this is what I wanted to do, but I wanted to do it on my own terms,
Mhm.
which is why, if you want. But so what I did is I got my finance and accounting degree, my CPA, good corporate job, and then 10 years in, I went out on my own to learn how to trade stock options and never looked back.
So that's interesting, because I'm guessing with that kind of background, you learned either the hard way or straight away about risk as well. Because I find it interesting that, we're in, especially myself being in the Forex market predominantly, we're in this industry where people think risk is like, they have to risk everything, or I don't want to do it because it's too risky. Um, I'm guessing that we're both completely the opposite, and we're both very conservative and risk averse in how we trade. And I'm guessing that with your business, it's the same thing.
Yes, I would say that's an area where we're probably very similar, where
Hmm,
it's mindset and risk management. That's what keeps you in the markets
that's
long
right.
term.
Yeah.
really kind of the unsexy side, I think, of trading, which is why I think a lot of trading education, or, just when I say that, I say it loosely, like YouTube videos and things that, the masses are looking at, they don't really hone in on that as
Yes.
much. Probably 80% discipline and mental and managing your emotions and trading and sticking to a structure and plan and building that consistency over time.
Yeah. And like you brought the word emotion into that. I think that's I've always said to people when they start, there's two things you've got to control. One's up here and the other's in here. Your head and your heart, your emotions are such a massive part of trading. And I see it that the danger, with YouTube, TikTok, all that Instagram, all that type of thing. There's a little bit of okay information out there. There's obviously a lot of bad information. Um, People always show the flashy red Ferraris and the private jets, and look what I did on this trade, and I'm made 50%, and but we both know that behind the scenes that's not real. But unfortunately, a lot of people get, I suppose, caught up in that roller coaster of thinking they're going to make a fortune straight away. And I noticed on your site, and there's one thing I also say, you had a section on there who this is not for. And I thought that was really interesting and good, because we're both upfront and honest about, we're here to help teach you. But if you want some ridiculous, gain, you're not going to get it with us.
That's right. That's absolutely right. And I think a lot of what's out there, I agree. It's, there are a lot of folks who want to say, oh, they see that one story, like you said, with the Ferrari, right?
Mm,
Oh, I really want that. How do I get that easily and quickly? But the
yes.
truth, like anything in life, you need to put in the investment up front. And it's not even, I mean, some of it, yes, dollar wise, but the investment of time and your energy to really learn how to do it right.
Yes.
And I feel like there's like this misnomer out there that, I mean, you do need to make that investment, but you don't need, millions to start. You don't even need thousands to start. I
Mm,
mean, right, and I have a feeling you and I could get really into this, but right now the markets, they're more accessible than any time before, right? You can
that's
open
right.
an account in, 15, 20 minutes. You
Yeah.
can start with $5. You can't afford a $500 share of Microsoft. You can
Mm,
buy a fraction share on many of these platforms. So it's so accessible, but you do need to make that investment upfront on education, because you don't want to get whiplash, and you don't
mm,
want to lose money in a trade because you put in the order backwards. You want to do it because maybe you called the market wrong. So so many learnings. I'm sure you could attest as well, having
yes.
been for more than 15 years.
So would it be fair to say that it's the learning how, like the how to do it is the most important thing right now when someone starts, or even if they've been doing it for a long time and have failed? It's the learning properly, the how to, because I say to people, if you do that up front, forget about the next 6 months or even the next year. Use that time as your learning process, your learning phase. And if you do that right, then afterwards things will be really good. If financially, but do that groundwork, that hard work up front. Learn how to do it properly, how to do it at low risk. Learn what sort of person and trader you are, and the results will follow.
Yes, and actually that last piece that you just mentioned, learn the type of trader that you are.
Mm,
We all have a different and personal relationship with money. And when it comes to trading, and I talk to a lot of my traders about this, is many times they'll say, I feel like you're a life coach in addition to my trading coach,
yeah,
because
yeah.
it's back to you, because it does involve risk. So yes,
Mm,
yes, how to is very important. And I run workshops just like on those tactics. But I would argue that trading and being successful in trading long term is probably 80% psychological. So when you just said it's the type of trader you are, the type of investor you
mm,
are, that relationship, and then determining, okay, like, how do I want to trade? What are my goals? How much am I willing to risk? Do
yes.
a gut. Make sure you have answers to all of those questions before you place your first trade.
Absolutely. And do you encourage people to start on demo accounts, or do you go straight into like smaller live accounts? How would someone start with you?
Yeah, great question. So I do work with a contingent of aspiring professional traders, options and Forex,
Hmm.
and every one of them are required to trade on a demo account. Um, so absolutely yes for those folks. For my beginner traders who are just dabbling, I do encourage a demo account. If they don't trade in a demo account, then I always encourage to start small,
Yes.
very small. Our number one rule, don't trade anything you can't afford to lose.
Yep.
And then number two would be never take the big loss, right? So there are some that just dabble because there is a different, going back to the mindset, it is different in demo versus live. And then finally, I'll say probably with my most experienced traders, I mean, I will say I get on coaching sessions and I'm teaching a new option strategy and they're placing the trade right there live. I was like, oh, why don't we try that, in demo first when it's a new strategy, a new
Yes.
time, a new, even position sizing as your account grows. I
Yep.
had that question this morning from a trader, get your feet wet. If you're trading with a significant amount of capital to you, right? It's personal. Get your feet wet first. And then when you feel confident, then go in your live account. So
Yep.
long story short, for the most part yet, although some folks who are just, dabbling in news, sometimes they might try a little bit with live to
Yep.
get their feet wet, start to build their confidence. And then we go in and we talk about all the elements you mentioned before, the real meat of the how.
Right. Now, the way that we teach people, and again, it's personal because it's up to each person of what they determine risk and amount of money. I personally, for my own trading, I trade at 0.5% of my account risk per trade. If I trade on prop firms where you can trade like on other companies' money for a profit share, I go down to 0.25% risk per trade. And sometimes that's even split over two trades, two positions. So it's very, very small amounts because like you said, it's the psychological, the mental aspect is so huge. And I think it's also important that you control that risk so you're not then frightened to take that next trade. Like if you have a loss, that loss I think should be acceptable for you. If you see the position at the time and it meets your criteria and you take the trade and it goes against you, then you shouldn't be scared about getting into the next trade. Because providing those criteria are right and the market goes against you, well, that's sometimes what happens. So I think that real low risk, low drawdown is crucial for people to almost like to trade mentally, because I think unless people really get into it, that whole aspect of live trading and the emotions is so important to get right.
Absolutely. There's so much I feel to unpack there, and
Mm,
it. So I mean, position size on every trade. Typically with traders, we'll talk about 1 to 2%, but the 0.5%, 1/4%, the other side of that is how many positions do you have on?
that's
So then
right.
you can
Yeah.
the broader your portfolio risk. So there's this analogy that I share with my traders, and it hits on just what you're talking about. You don't want one loss, mentally to make you so fearful you don't want to get back in.
Yeah.
And so there's this analogy of 10 trades. And the idea is you have a portfolio of trades, and it can be, currencies, it can be, US stock options, whatever it is, whatever you're trading. But you have 10 positions on at a given time. And you go in and you have ideally, you have your trading plan, you've position size either to max loss with options or you have a stop loss, so you're managing your risk on all 10 trades, you do your analysis and
Hmm.
approach it, right? The reality, though, going in, start with the mindset of, even though maybe you did everything right and followed a system and plan, that you'll probably have at least 2 to 3 those trades will come out as a loss. Maybe, and I'll call it, 3 to 5, right, will be, a small loss or small gain.
Yes.
And 2 to 3, ideally more on the upside if you're playing probabilities
Mm.
in charting. But we'll just call it 2 to 3 winners, right?
Yes.
And you want to lock those up because they're going to pay for your losers. And what I see a lot are traders that want to get out of their winners early
Yeah.
because they're worried. And that's where that emotional discipline comes in, which I'm sure you could speak to as well in your experience.
Yeah, we see exactly the same thing. And that's why with the strategy that I've developed, our profitable trades are like a broad range would be between a 2 to 1 reward to risk and about a 4 to 1. So in other words, if you were risking 1%, you'd make 2, 3, 4%, depending on the individual trades. And so I think that's really important because, as you said, you're going to have some little losers and then, bigger gains, and you kind of step your way up. When you look at like it's not an equity curve as such, it's more of I look at it as like a ladder, few little losses, bigger gains, little losses, gains. And I seem to think that that's how people progress well. And then we talked about compounding as well before we started, and getting people to understand the power of compounding is huge as well. And I think a lot of people, it's a very simple concept, but I think a lot of people don't know how powerful it can be, both when you're making money and also when you're losing money, because your risk is therefore the same percentage, but a smaller monetary value. So, yeah, compounding, time, they're both very powerful things.
And really, I mean, compounding, that's how you build wealth.
That's
There's a
right.
workshop for building wealth with confidence. And this is for folks like completely intimidated by the markets. Where do I start? And I always start with why even invest? And I
Yes.
have a chart that starts with $50,000. And there's 2 lines on this chart, $50,000 over 30 years, sitting in the S&P 500, and it's over $800,000 in profits. Sitting in, of course, I used a traditional savings on the flip side, and it's about $8,000 over the same amount of time. Now that, yeah, it's steady returns, which we know, gosh, over since 1928, there's a random stat, but about, so the S&P, obviously it's averaged about 9.5 to 10% per year.
Yes.
But it's actually interesting when you look at the average between 8% and 12% annual return only happens about 20% of the time. And so I think that a lot of folks see it as really volatile because you tend to remember, some of those really down years or others, it's just the really great, really great years that the S&P's return, 25, 30% or more.
Yeah.
But time, right? That compounding, it really makes all the difference. And that's how you build wealth. You won't do that in a traditional savings account, high yield savings around 4%. It's a similar concept, maybe emergency fund, but the financial markets, that's really where it is. The other thing that you mentioned is reward risk. So 4 to 1 is excellent. Yes. So typically we target around 2 to 1. Although it is swing trading, it's shorter term, but you hit on that key concept. You want to make more on your winners than your losers.
Yes.
So even if you're batting like a 50-50 win-loss, you're going to come out ahead. And that's really the key to it. One base, once in a while, maybe an earnings play or non-farm payrolls or a Fed meeting, you might play certain economic reports, corporate earnings if it stops, and really try to, get those home runs. But even those, I'll sometimes go in, instead of 1% risk, like you do, right? 0.5%, or instead of 2%, 1%, I'll cut that on those that, feel more speculative than what the other 95% of my trading is. So
nice. So we a technical trader. I'm a technical trader. I look at charts. Yes, I'm aware of, look at the news events, like you said, the non-farm payrolls or employment change, I think it's called these days, but all those type of things. We're aware of them, but I'm personally trade and teach as a technical trader. Do you do something similar with candle patterns, and is that how you teach people to look for certain positions?
Yep. Yes. So I would say, I think there's definitely a place for both technical, charting and fundamental analysis. I think they work hand in hand.
Yes.
But primarily what I teach and what I focus on with my students is technical analysis. And the reason for that, it's focused on swing trading, swing time frame. So anywhere from, well, I guess a few days up to maybe 7 to 8 weeks on the long end. Most of my traders around 2 to 3 weeks. Most of my strategies actually hold about 4 to 5 weeks, which is definitely on the longer end. But
Mm,
because of that, momentum trading, technical analysis, however, there's always a fundamental check before going into any trade. So looking at things like earnings announcements, if I'm
mm,
not as with the industry or that specific company, looking at its competitive positioning, analyst reports, what are, some of the targets, recent earnings. And I always do a scan on news to understand, okay, what's more current? Is there,
mm.
M activity, their product lines? What are their competitors doing? So I run through all of that before I put on the trade, but everything up until that point is technical analysis through top down. I would love to hear more about your system and how you do selection as well.
Yeah, sure. So, although we're called the Forex Trading Coach, over the last number of years, we've had access on our trading platforms to more markets like the indices. In fact, I took an S&P 500 buy trade yesterday, which was profitable for our clients. But we can trade the indices, the metals, commodities, cryptos, and of course the currencies. But the way that I trade them, they're all taken the same way. I'm looking at a chart, and it could be the euro US dollar, or it could be the S&P 500, or it could be Bitcoin. And to me, it doesn't matter what I'm trading. It's more, does this have the technical setup to move in either the bullish or bearish direction, depending on which way I'm trading. So and of course, when I started and worked this out, the system, because it took me 4 years of like going around in circles, of losing money, buying different ideas and systems and getting nowhere. And so it's about 18 years ago, things came right. 16 years ago, we started coaching. But obviously back then, cryptos didn't exist. We couldn't trade metals, we couldn't trade indices. So what's been really pleasing is because we're based on sound technical analysis and looking at candle patterns and where they occur within the chart, have they got room to move to the profit target? We look at round numbers like strong levels, price levels. And by the way, I find that so many people fail to look at the price of something they're buying or selling. Can you have your stop loss protected by a 00 number, things like that. So we quite heavily look at the actual price. A lot of Forex traders just fill their charts with clutter of like lines, and it looks like spaghetti on their charts. There's lines and dots and arrows, and they actually don't look at the price. But simple candle patterns and analysis can work, I find, across all markets. We don't look at news as much as you sound like you do because of the nature of predominantly the markets we're trading. We're aware of the main events like an interest rate or a job employment data, but I don't specifically trade them. I prefer myself technical analysis, because you could have something affecting the US market, let's say, but if I'm trading the euro against the New Zealand dollar, it's completely irrelevant what, in most circumstances, what's happening in a US market. Or if I'm trading the Australian against the yen, what happens out of the UK or Europe, it's pretty much irrelevant. So I find that in currency trading, a main news event is only relevant if you're trading that currency. So the British, you're trading the British pound and there's something out of the UK, obviously that would affect more likely what you're trading. Or you don't trade until that news event's finished. But predominantly we're candle patterns and technical traders.
Well, and I love what you said about keeping it simple. I've definitely worked with traders and there's, Fibonacci retracements, and there are all these different, indicators and I was price and volume, primary indicators, start there. And you bring up an interesting point too around pairs trading. So there was a stint about 15 years ago where I did dabble in Forex, and I loved the concept of pairs trading so much. I actually do apply that to my stock and options trading.
Okay.
Within a sector. I might
Yes.
be, energy is a good sector to do this because I think, So anyway, so basically, you work on relative strength and
Yes.
or a stock that's outpacing the S&P, you have a bullish strategy on that particular company stock, and
Mm.
then you have one that's relative weakness within the same sector. So if there's a sector rotation, you're
Yeah,
making,
yeah.
they hedge right for one another.
So you could use sectors in the way that I use it, like the euro or the US, for strength and weakness, because we've got trades setting up very shortly in half an hour. And I was looking today for a sell trade on the euro yen. It just happens to be looking like a reasonable trade. But then I've looked at the euro against the US and against the Aussie and the Kiwi and the Canadian, and the euro is looking really, really strong. So by looking at strength and weakness, it can actually keep you out of losing trades, because although this euro yen looks like it's dropping, the euro is strong against every other currency. And so I tend to stay away from taking a sell trade on the euro yen today, because I'm trading against the overall predominant strength of the euro. And I think when you blend that with your chart analysis and your strength and weakness analysis, it can actually help you to avoid losing trades as well.
Yep,
And
absolutely. It's really zooming out. It's a different perspective.
mm,
And similar to what you were saying before with charting, one of the great things about it, whether you're trading, right, cryptocurrencies, ETFs, stocks, commodities, currencies, right, it's transferable or translatable across
yes,
different asset types. And I would say the same thing. And I'm actually a little curious about this view. So I mentioned, a swing trading time frame is my sweet spot. Although
yes,
I see charting, right? You can go to a 15-minute, 30-minute,
mm,
hourly time frame, day trade on that, or you can buy and hold and go heavier on the fundamental. I would
yeah.
love to hear more about your approach, and just in terms of time frame and how you look at that technical analysis.
Yeah, definitely. So I use a phrase of "there's no prizes for trading more," because everybody thinks they need to be looking at short time frame charts, and the reality is you don't, and you should probably do the opposite. Um, so as an example, tomorrow it's the 1st of October. And so we'll be going through the monthly charts for the September close and looking at those on our longer time frame charts for our October trades. The beginning of each week, we look at weekly charts, and every day we look at the daily charts. And so that's the 5 p.m. New York close. And so we make the analysis of where we see trades based off those close of the daily charts. At the same time, at the 5 p.m. close, we can also go through and look at 12 hours and 8-hour and 6-hour trades. So we look at those shorter time frames as well, because they all close at the same time. My other personal favorite time to trade is 5 a.m. New York time. Not great for you, but and you don't have to be there at that exact time. But at that time, the 12 hours change over as well, because obviously it's 5 p.m., 5 a.m., two lots of 12-hour charts. And so I find that those are the two best times to trade. If I had to pick, someone's working full time or they're traveling, like we've just spent a month traveling around the US, I traded once a day at 5 p.m. And it doesn't matter whether you put the trade on at 6 or 7 or 8, because we use limit orders. We don't trade at the market so much. I use a buy limit. So if I see a bullish pattern, I will take a buy limit to buy below the current price. So in all markets, things move up and down, and if it comes back down, fills my buy limit, and then goes up, hopefully in the anticipated direction. So it means you don't need to be there at that exact time, because you can put the buy limit on. If the market pulls back, triggers the trade, you're in. And if it doesn't, it just takes off, then you miss the trade. And I think that's, again, an important thing, because we've got coaching clients in 109 countries, everybody on different time zones, different, works and family and everything else going on in busy lives. But most people should be able to trade for 10, 15 minutes once a day. And I think that's the important thing. You don't have to be there glued to your charts, because for me, trading your time zone, it's 2 o'clock in the morning. I've got better things to do at 2 o'clock in the morning than sit looking at my charts. Exactly. And so I think it's important that people focus on trading less, but trading better quality?
Oh, yes. I would say one of the biggest myths in trading is that you need, and I always ask this question all the time, when I was learning trading and first getting into coaching is, Diana, how many screens do I need? And I said, you need one screen and a very reliable internet connection. But right, just like you said, through limit orders or even through bracket orders, right? Set it and forget it. You have your entry point, which right, limit order,
That's right.
your a limit, and then your sell stop, which stop order. So, but yeah, you just play it's advanced order type, but it's so simple. Three
Yes.
legs. If it triggers, you're in. If it doesn't, then it probably wasn't meant to be because it's not moving in your direction or it's not the price that you need to find the reward risk. But then once you're in, you can sit on it. It hits your target. You're out for a win. Hits your stop loss. You're out for a small loss.
That's right.
And like, and I think that's so important. A lot of my traders, they'll do their analysis on a Sunday, for example, and typically the analysis involves looking at the broad market, so the S&P, NASDAQ, Dow for US equities,
Mm-hmm.
and sectors, what's relatively strong, what's relatively weak, and then essentially a filter for individual stocks. They go on a watch list, market opens, you monitor your watch list. But just like you said, 10, 15 minutes a day, otherwise risk over trading. I think the statistic loosely is, 95% of day traders lose money.
Yep.
And I actually tried the other day. I was, I think I was actually on it just like the S&P. I had a short-term trade, a day trade, and I was just going to be in it for a few hours. And I was watching every tick, and I wanted to rip out my hair. It's just not how I trade. It's not
No.
how I roll. I don't know why anyone would do that to themselves. Do your analysis up front, know your numbers, know your risk tolerance, know your time frame, and then place the trade and
That's right.
trust the
Well, it's,
stare at the yeah.
it's quite interesting. We've both been in the our various markets for quite a long time, and we both look happy and we're smiling and we're enjoying it. And I'm sure a lot of it is because we worked out that you shouldn't be this glued to your charts because I think we both find it enjoyable and we look forward to each week starting because of the almost like the lack of time that we spend doing it. I think if you were glued to it, just 10 hours a day, you'd be just, I need to do something else. And I think that's where so many people go wrong. Or they go, I've got a full-time job or I've got lots of kids. I can't do it. It's like, yes, you can. I've got 5 kids, you can do, luckily they're all grown up now, but I've been trading through raising 5 kids. You can do it. You can travel and do this. You can have a job and do this. And I think that's where so many people think that's not possible.
Yes, it's so true. When I started trading about 15, 20 years ago, I was working full time and it was a very demanding job. And that's where the bracket orders where it was, talking about those. And many of the traders that I work with now, we meet at odd hours of the day and evening. And because we're working around those schedules and they're looking for that freedom and they're not greedy, but they love the flexibility. There's a passion. I always say, like when you're a trader, it's in your blood. Like no one, even now, my family, we don't know what you do.
Yeah, I get the same.
But you just know. And I've worked with options traders, Forex traders. Yes, there's that element of risk and you have to set expectations. If you for a while, like we have, you've taken some punches to the chin. But then you come back up, you learn about risk management and you find a way to be disciplined if you want, to be in it long term. Because if you have a 50% drawdown, you're gonna have to make 100% to
get it back again. That's right. Yeah, people don't get that simple number, but it's so true. Yeah. So Diana, there's a couple of questions here. What's the pain point that people have when they come to you? Like what's going wrong or what do they need to fix when they come to you? And also, I suppose the second question is with the way that, cost of living and inflation is, it doesn't matter where you live in the world these days. What's the downside of not doing something like we're doing? Like, what's going to be your result in 5, 10 years if you don't do anything also?
Yes. Okay. Both great questions. So the biggest challenges I see, and there's actually a bit of a spectrum. So I run workshops for those completely intimidated by the markets. They don't even know where to start.
Yes.
So the biggest challenges there, well, it's where do I start? Why do I need to invest? I don't understand the terminology. And so I run through all of that and then just the tactics of opening a brokerage account. And then I'll share some initial investments to start with. And I have students in those classes who they start, zero knowledge of the markets. By the end of it, like that day, they're opening brokerage accounts and placing their first trades for the first time in their lives. So amazing. So that's for my newbies.
Yep.
And then my advanced traders and professional traders, so many things, but I'll say the number one is around discipline. And hey, can I tell you about this trade? It hit my profit zone, but then it turned over. Should I take my profits early? I said, well, are you going to take your losses off early too? Because otherwise, your losses are going to cut into those profits. And we talk about that discipline in trading. Others will come to me and I had this issue when I first started trading too. I was a bit too conservative, the trained accountant CPA, and you need money to make money. And I was break even for a long time.
Right.
And so more experienced traders, almost all have drawn down an account to zero. So I guess risk management. I don't know why I didn't think of that first. And then the other is they're sitting at break even and they want to break. So it could be new strategies looking at their their risk management, their strategies, their trading plan, or even exploring new option strategies or timeframes, things like that. It's so different but risk management, just getting started, probably two of the biggest ones, and then just that discipline. Like they know what to do, but applying it's very different. So I'd say that for the first part of your question. Yeah, right. Yes.
And the cost of living, doing nothing.
Cost of living very expensive right now. I think we're dealing a bit with the aftermath from COVID, an inflationary environment. But right, when we look at, where we place our money and, there's some folks who might be saying, I don't have money to invest. Are you crazy? But the idea is whatever it is, even if it's, $50 a month, we talked about compounding earlier.
Yes.
If you in a savings account, checking account, inflation 2 to 3% per year, typically, you're losing money. If you at the minimum, high yield savings, but again, you're still just about at par. Putting your money in the stock markets over time, that's like we talked about before, that's where you build wealth. And you start with what you have where you are. So, and that's how I was able to leave corporate. I don't remember the number now, but I had a set amount each month that I could afford, and initially into savings, later in the markets, and then I checked it, 10 years later, and I quit my job the first time. So it's so important. You don't need to start with thousands, but you want to start with, and I know you have perspective on that as well.
Yeah, and it's the same thing. It's like, I mentioned earlier, I think it's important to learn the how to do something. Because in the Forex market, you could trade your own money, you potentially could trade someone else's, but we have prop firms as well. And prop firms allow you to trade other people's money once you've proven that you can do it within drawdown criteria for a profit share. And so that's been around for maybe 5 years, sort of tops, really. There's been quite a lot more companies in the last few years. And a lot of my clients do end up trading through prop firms because, like you said, people go, love what you do, want to do it, but I don't have enough money. And it's like, you can either, like you said, put a small amount in and learn how to do it, or you could go through to a prop firm and work on a profit share. And I think that's been a real game changer for a lot of our clients as well, because you don't need to have, $100,000 yourself. And even if you had $100,000, you might want to still trade the prop firm money and, a lot less of your own. So there's options out there for people. One of the other things I think is so important, and again, it comes back to that mental aspect, it's having that comfort and that knowledge of you can do this for yourself, through learning through you or learning through us. And I think that's something that is massive. I love that knowledge and that comfort, that almost like that feel good of, I don't have to go and hand my funds over to someone I'm never going to meet or know what they're doing with my money. I have complete control. I have the knowledge up here of doing what I want, when I want, and how much I risk or not. You know, that whole control, that self-control, I think is massive. That it's almost, you can't underestimate how important that is.
I completely agree. So, especially during COVID, so if we go back 5 years, you know, there was, you know, all over the newspapers about the democratization of trading and the markets. And a lot of folks with during that time, right? So maybe they lost their jobs or wanted to start something new, or that now they're home. So like, well, what do I do with my time?
Yes.
And there's so many new entrants to trading, you know, as retail traders.
Yep.
And so it's more accessible than ever before. And one of the things that I've learned is, you know, since starting my business, I've actually worked, you know, met a lot of wealth managers, advisors who are picking my brains, and they're telling me a lot of the younger generation don't trust, you know, advisors, I guess, and so
Yes.
they want to learn how to do it themselves.
Yep.
So we've talked about different partnerships. And I'll sometimes say, it is empowering, just that education, learning how to do it yourself. When you're older, you need tax strategy, retirement strategy, estate, you know, all of that. You know, maybe you pivot, or maybe you don't. But just having, just like you said, just having that knowledge and debunking the myth that trading and the financial markets are just for Wall Street. I always say, you know, they're not Wall Street, they're for Main Street too. You know, open a brokerage account in 20 minutes. Start with $10. You know, invest in an index fund, or learn currency trading through an established program and a system that you can plug into. I mean, that's how I learned through a prop firm. Did a 9-month program, met the partners in Vegas, and then I started working internally and coaching and mentoring their traders. And you have to empower yourself that way, even if nothing else, just the terminology and understanding works. It's because money is so essential to our everyday lives. And I'll get off
whether we like it or not, it is.
Yes.
You have no choice in that one. Diana, how would someone contact you? What's the best way of getting in touch with you?
Look, I can be reached through my website. It's tradingwithdiana.com. You can schedule a free call, sign up for my free newsletter, and go from there.
Awesome. Hello, it's been so enjoyable chatting with you. And I think that we've got so many similarities with what we do and why we do it as well. I think that it's the why we trade, the why we help and teach as well is really important. Well, thank you so much for your time. I'll put links here to your website as well, and so people can contact you. But thank you very much for your time today, and we'll keep in touch.
Sounds great. Thank you so much for having me on.
Awesome. Thank you.